This BizNews production is brought to you by Brenthurst Wealth, the leader in offshore investing, connecting South Africa to opportunities worldwide. Invest better with Brenthurst. Okay, wasn't that interesting? Always is, always enlightening, always from the heart. And thanks, Magnus, for not whining about not being able to use slides. You know, there's a... This is not a hall where you can put slides in. Maybe one day there will be a hall that we can work on where there's slides, but it's much better to have that connection with the audience. I want to just ask you, before we go into kind of the depth of what you were talking about, the increase in the budget to 2 million rand from 1 million rand, was that, have you seen people reacting to it now that you can take 2 million rand offshore, no questions asked?
Immediately, people say, thank you, and I can take 2 million. And I'll tell you why that is. Apart from, I wrote an article for you a while ago saying the limits need to be increased because the real benefit has been declining over years quite dramatically. In 2015, with R1 million, I could buy $85,000. Beginning of last year, it dropped to $54,000. Plus, you had tremendous inflation in dollars in most parts of the world. So the real purchasing value had dropped quite substantially. I had the experience, my wife was studying, not my wife, my daughter was studying in London in the university, and university fees, travel, accommodation, food, entertainment, it breached the 1 million mark. And overnight, the Reserve Bank just closed their account because they keep watch of these things. And that infuriated me. I mean, so again, we're back in the Middle Ages. You cannot spend your money where you like. So I was very encouraged by that, but our clients immediately reacted. And it just makes it so much easier. It gives people freedom, personal freedom, financial freedom, for which I advocate. And I think it was a very good step.
I have a different view to you on the budget because of the detail that was addressed by Treasury. It's not give Enoch all the credit, but there were a lot of little things like that which had not been adjusted for years and years and years and now have been changed. I'm sure in the financial advice industry there were a few things that came up, estate planning, just limits that were pushed up, which has to at least get some credit on your side.
No, I'm giving them a great deal of credit. I mean, the RA contributions have been pushed up. The donations has been pushed up to 150, I think, which is still ridiculous. It's meaningless amounts of money. And then the tax-free saving was pushed up slightly. So there was welcome respite. And of course, the first 3 million rand when you purchase a house for your personal use. So there's been some very nice changes in the budget. That's quite surprising. I think government realized that they haven't done this for many years. I can't remember when last a donation of 100,000 rand was adjusted. I think it's 20 years ago. I mean, 100,000 today and 20 years is two different things. So they needed to do that to be fair, and you have to applaud them for that. What else was in the budget? It was a boring budget. Where is the growth going to come from? I didn't see that inspirational.
Yeah, no, we can't. Rome was not built in a day, as Helen Ziller said. But Helen Ziller also said something she said a lot of interesting things. But I think if you look at the people in this audience, and I asked her this question because she said she wants to get Joburg working again. You still live in Joburg?
Yes, I do.
There are a lot of people who used to live in Joburg and loved living in Joburg who don't live there anymore. And it's a little bit to me like how many of our children have left the country. We've got to fix the country to bring them back home. Joburg's got to get fixed to bring, if it's going to, bring back the people to Joburg. It's pretty hard to reverse that. Do you think that's possible in our lifetimes?
Can I be honest? This debate has been raging for a very long time. When I was still doing a show on 702, the one night was a guest, and this is 25 years ago. There was a guest about the revival of the Joburg CBD. And we had this exact debate 25 years ago. And they were propagating, this is now the time to buy, and they were selling flats in the center of town, etc. And this is now the revival coming. I beg to differ at that point, and I still beg to differ at this today, because I grew up in Johannesburg. I grew up in Hillbrow, in Berea, in Yeovil. It was a wonderful cosmopolitan cities, and I saw how through neglect, through lack of governance, through lack of anything, those suburbs, pristine, beautiful buildings, have been gutted in a 10 to 15-year period of time. I'll tell you a little story. Sorry, my back. Let me sit this way. Sorry. This is what two failed hip operations do to you. So, but I'm not on crutches anymore. A couple of years ago, there was a rugby game at Ellis Park. Now, you all know Ellis Park, not a great area. So, and I had a couple of clients from the Plaas and the Boere, and we're all going to go to watch the rugby. So we all got into a combi, and as we're driving on the highway, I continued on the highway going around the city, if you know Johannesburg. And one of the guys says, no, but why don't you go through Berea? It's just cheaper, or Hillbrow. I said to him, but it's dangerous. He said, oh, come on, man. We don't scare easily. So I said, okay. I took the Wilds off-ramp, and I went through Berea, and then we hit Hillbrow, and very soon we were in the middle of you-know-what. And it was just chaos. There were just people, and they were braaiing, and there was rubbish. There was just guys knocking on the door and I saw these groot manne getting very, very quiet. And then the one guy said, let's get out of here. It's scary, ladies and gentlemen. There's a total breakdown of law and order. And as much as I love Helen and what she stands for, I don't think she will turn Joburg around. I think that the corruption is so endemic in the councils. There was a piece in Netwerk 24 a week ago, written by Elof, one of the, I can't remember his first name. He was one of the negotiators, etc. He wrote a piece about Johannesburg, how it's collapsed. That 2 years ago, the Joburg municipal manager decided that the Joburg Metro building, where everything happened for Joburg, is unsafe. Totally out of the blue, she said, no, we must vacate. The people got up and left the building that day, leaving their computers and their files, and they just went and worked from home, so to speak. And since then, the administration in Joburg has collapsed. Lights, water. I mean, you cannot believe. I mean, I have a little office for us in Bryanston Fourways, where we have an office. It's 2 sectional title units. I got an electricity rates bill the other day. For the one portion was 100,000. They had the same size, and the second one was R1 million. I mean, then you communicate with them and you say, please fix it. They say, no, well, first pay and then we'll, that's, so I think Helen is up against it. And I hope I'm wrong. I hope I can stand here 5 years from now, but I've seen Joburg just collapse. The roads, the robots, the hawkers, the beggars, the crime, the mafia, the taxi mafia. I mean, and not only that, my biggest fear for me and my family is being stopped by the SAPS on the road or the roadblock. That's my biggest fear in life. I can protect myself in my house or in my building, but when you're driving a car and these buggers jump out of the bushes and you're driving by yourself, there's a very good chance that you're going to have to pay a bribe to get out of whatever case they have against you. So that's my biggest fear. And do you want to live there? Well, people in South Africa have made their choice over the last 10 to 15 years. The migration from the north, not only from Johannesburg, the migration from the north, as those towns collapsed, the Kimberleys, the Bloemfonteins, the Bloemhofs, the Wolmaranstads, the Bettels. Now, I used to drive around these areas visiting clients. I saw this with my own eyes. And this is the biggest financial collapse in South Africa that nobody's talking about. All those properties, whether it's residential or commercial, used to have a value, used to belong to someone. It was in someone's balance sheet. I have a house or two, a building, a garage. That's gone. Zero. It's worthless. The banks moved out, the Pam Goldings moved out, and you have the debt collectors move in. Those towns have gone, and nobody talks about that destruction of middle-class wealth. We see it in Joburg. I live in Joburg. I love Joburg. But my house, in real terms, has not gone up 1 cent in 20 years. Let me repeat. In inflation-adjusted terms, I will be lucky if I get the same price that I could get 20 years. And if I talk to my clients in that, they're all in the same boat. They'll all tell you the same thing. My house is worth bugger all. I cannot sell it. I cannot give it away. As opposed to Hermanus, I mean, this is just a bubble. It's a fantastic bubble with great restaurants. You know, someone has just paid 105 million rand for Marcus Jooster's house. In Johannesburg, you can buy a whole suburb for that price. So let's make a note of Helen Ziller. I'll support her. I'm registering. I'm voting. But my golly, she's up against it.
But surely there has to be a line in the sand somewhere. Surely there has to be something motivating Adrian Gore, for instance, in buying and spending billions of shareholders' funds in buying the Discovery head office. They were renting it, now they bought it. Surely there has to be another side to this story that it might be turned around. And in Helen, you probably got the right person if you are going to achieve that. What do you need to see, though? What do you need to see for those green shoots we hear so much about in South Africa to occur in Johannesburg?
It's not only Adrian Gore, and I saw that. Sandton, the heart of Sandton is still a viable commercial center, and he bought it for other reasons. He needs a big office for his business and his growing businesses. So, and he couldn't afford Cape Town anyway. And you've got Robbie Brosen, who's with his billions, his peri billions. You know, he's trying to revitalize the center of Johannesburg. I admire those guys, but I've seen so many guys trying to do it. But law and order, number one. You need people to adhere to law and order. It's a simple fabric of society. If someone doesn't, and I'm reminded of the late Dr. Simon Murray of Alan Gray. Many years ago, I asked him a question at a conference. I said, when you invest in a country, what do you look for? And number one was law and order and respect for property rights. You see, if you don't have those two, they will collapse. And we don't have it in Johannesburg. There's no respect for property rights. I don't know if you've been following these guys in Bryanston, very upmarket suburb, have been invading homes when guys go on holiday. And when the guy comes back, there's 35 Zozo huts in his garden, and he's rented it out to 140 people. Now, that's the kind of stuff, okay, they've got to step up, but they did not act against Hillbrow when they started taking over buildings or the center of CBD. I just don't think it's simply too late. Simply too late. So
why do you stay there?
Why do I stay there? Well, first of all, you stay where your kids are. My kids, until now, my Lameki just finished with university, and she's still in Joburg. We still want to be there, but we will probably move down to Cape, where we bought in Baldwin many, many years ago. And you look at the prices. Baldwin, the prices have doubled and doubled again. The Hermanus, same story. Franschhoek, Stellenbosch, Cape Town. It's a consequence of moneyed people with money. Whether you're black, whether you're white, I see in Baldwin many black families building homes. It's not only a white thing. They moved down with their money that they didn't send offshore, and they bought houses in the Cape, and they live here. And I said in the last seminar, when I was asked about immigration, is immigration a big factor in your life? And I said, no. Our people, our clients are very happy. And I go back to that date, 1st of April 2015. That's when it gave people optionality. People say to me, I can now send my money offshore and have a nest egg. I'm comfortable, but I can now comfortably stay in South Africa with my network, my family, my friends, my clubs, my network, my golf. And that's what happened. People have moved to the Cape. The number of people who have left South Africa, in our experience, is very small. I don't know, Mark, about you and others, but the kids are leaving. That is a big number. The kids are gone. 30 to 40% of the young children, they educate themselves and off they go. So there's this gap developing. So Cape Town you should have the next meeting in a town like Brits or something, Alec. Then you'll see what the ANC has done to a town. You cannot believe how they've got to, or Lichtenburg. I drove through Lichtenburg a while ago. You know, the main road ends there, the tar road, and you're onto a dirt road. But that's the main road of Lichtenburg. I mean, Clover has left the city. The biggest butchery is left. It's gutted beyond belief. Why? most of the ratepayers' money has been stolen over a long period of time. It's not being reinvested, and it's just gone. So,
Did Sobotla, we know all about it, and Piet Leroux, good for Piet Leroux for getting Ramaphosa and co involved in that one. I'm interested in a little bit of elaboration on gold. I know Pete Major said by all historical standards, gold's ridiculously high. Rashir Sharma, I'm sure you've read his book, Breakout Nations.
Yeah.
A great book, which if only they made a set work in Pretoria. He says that, in his opinion, gold's in a different ball game now. Things have changed dramatically because the world has changed. And it was interesting on Biz News Daybreak this morning, or maybe last night's briefing, the team put together an interview with Ed Jardini, a name that we used to talk to for many years, who's now based in New York, who's saying $6,000 by the end of the year and $10,000 a few years hence. These seem crazy numbers. What's your assessment of that, having watched gold right back in the days when it was 250?
That's a good question. I need to elaborate. As gold itself has been in a bull market since the bottom of Gordon Brown. I should put it differently. When he sold all Britain's gold, $295 an ounce he sold, or half of the. And since then, it's been in a steady upward climb. And it's been a phenomenal asset to have money in. And David Melville will be nice to you. Gold has done even better. In our days, when Alec and I were in Johannesburg, we had something like 30 gold mining companies and mining holding companies listed on the stock exchange. You were in the big league if you were a gold mining analyst. Every quarterly numbers were highly anticipated, and we were waiting for the reserves and the quality, and the gold price would run. And since then, of course, our gold mining industries have shrunk from the best performing. Yet gold shares, whether you buy them here or offshore, has been a phenomenal asset class. I'm just thankful, and I think I saw Meryl Pick, I don't know her, but I recognize her from the photographs, that they did not close the Old Mutual Gold Fund, which Old Mutual wanted to do in the 2017.
The managers here.
Well done. Well done. If you look at the kind of...
Do you want to take a bow of the manager? Is she sitting in the audience?
Yeah.
Meryl?
I saw her this morning walking here.
Okay.
Anyway, so we nearly did not have a gold mining fund to invest in. That is the kind of approach that our large asset managers, they wanted to close it. David Melville, Neville Stevensbert, and I made a couple of comments, and I said, no, we need a gold mine. At that time, it was a 400 million rand gold fund. It is now a 3 billion rand or 5 billion rand gold fund. So sometimes big asset managers can also get it wrong. So the people have spoken. They said they wanted gold shares. Now, to answer your question, I suspect if you're just from a purely technical and a fundamental perspective, these are very powerful charts. There's fundamental buying by the Chinese government and governments all around the world. Maybe what Trump did when he confiscated Venezuela's gold, everybody got a scrick. So gold plays a nice role in our portfolios if you can live with the volatility of gold shares. The final note, in our company, we had a ceremony at the beginning of last year where I needed to buy 10 Kruger Rands, and I bought it from David, and we were handing them out to some of our top guys, and I paid 49,000 Rand for a Kruger Rand. How much are they today, David? 92. There you go. I would still buy gold.
Before we go to the questions, you mentioned that you've got gold as a good chunk of your portfolio for the Piet versus Magnus challenge, where you were left in the starting stalls at the jump, but you've been progressively catching up. Can you give us an update from your side? Because in the most recent times, if you got 15% in gold, you must be looking quite sweet.
Well, I don't follow it 5 times a day like I used to. I only check the value 3 times a day now. The portfolio is currently at $41,000 roundabout there. I checked about a week ago. And so 4 years ago, it was at 20. At the bottom, As this competition started, and timing is so important in life, as this competition started, the global markets tanked and the rand strengthened. I was within 6 weeks, I was like 40% behind Pete. It's like left in the stalls, my saddle fell off, and I had to put it back on. And then I've just said, okay, let's just stick to it. So it's been fun and games. And Peter's having a really good run this year. He's actually chosen some good winners. So it's fun and games. It's educational. And people are learning about the risks and rewards and the diversification. And the only person who's going to be the winner is people who learn from this. There's no long-term. I mean, long-term, depending on what you define as long-term, there's no question that, offshore has been fantastic since 2010. But over a longer term, South Africa has been a good place, driven by its gold mining industry. If we can resuscitate our gold mining industry, South Africa is a winner.
$41,000 is worth 680,000 rand. You might have just timed your run perfectly. It'll be interesting to see because the competition ends in November, I think.
That's correct. 11th of November, 12 o'clock. Maybe it's like the Boston Marathon. I don't know if you've seen that clip of the Boston Marathon where this guy was leading for a long time and he was coming to the end of the line and he didn't realize there's this guy coming up behind him. And on the finishing line, the guy from this pipped him by 0.1 second, the narrowest marathon win ever. So maybe it could be one of those things. We'll see.
We'll be watching. Okay, there are a lot of questions. Michael Ash starts off. South Africans increasingly move capital offshore for security and diversification. What key policy changes would restore investor confidence and attract significant inward investment to South Africa? The perennial question, Magnus.
Well, the government has done a lot to make it easier to move money in and out, but there is still major hurdles if you want to take larger amounts of money offshore and bring money back. So it still is a mountain of paperwork just simply to move your own money or your company. So the paperwork, the foreign exchange rules are still far too onerous. In Mauritius, if I want to move $100,000, doesn't matter where, I instruct my bank and off it goes. They do ask, where's it going, where's it coming from? But it's a simple instruction. So the issue of exchange controls, or the intrusive exchange controls, is still an issue for a lot of investors. And of course, the other one is BEE is an issue for them. And they're simply not investing. They say it doesn't bother. As that article about mining said, they say that global mining is a comparative business, a very important. I looked at the word and I thought, that's smart. A comparative business. These guys come and compare South Africa with Canada, with Australia, or Chile, or with the other mining countries, even China. And they do their numbers and they walk away from South Africa because we don't stack up well in terms of mining rights, predictability of taxes, etc.
Yeah, the Fraser Institute tells us every year. I wonder one day when the legacy of people like Gwedi Montosh is written, what historians are going to be saying. David Turnbull's question, movements on the JSE suggest that foreign capital is buying local stocks. If foreigners are comfortable investing in South Africa, shouldn't we be?
Well, I'm not saying don't buy the JSE. I'm just saying, to answer your question, if you go look at the flows of money, foreign money into the JSE, for 11 or 12 months last year, it was negative. It was only in December that money positively came into the country. Foreigners have been invested in our bond markets primarily, and it's been a phenomenal hunting ground for foreign investors, even for South Africans. I mean, our bond funds that we offered our clients, almost on a straight line return, has given 15% year after year for 5 years now. That's phenomenal. No risk or little risk. So the foreigners have only started nibbling on our gold shares and other companies in the last months of last year, beginning of this year. So there is a recurrence. And now I'm not saying, now I need to lay a statement when someone said, everything is offshore. In fact, there are a lot of our clients that I advise not to go offshore because their needs are different. They don't like volatility and it's not long term. Our income and bond space has been a phenomenal space for an advisor. You've been giving people predictability and inflation plus 5 to 7 to 8% returns year after year, which is retirement nirvana. You're in heaven. Nothing is better for a retiree where your income rises by inflation and 5%. And that's been phenomenal. But the offshore-onshore debate is far more nuanced than that. A lot of our clients say, I want my money offshore because I'm not going to need it, but my children who are in the UK or Australia will one day need it. And if that is the case, then you send everything offshore. You cannot take the currency risk for something in the future. I would rather take the currency risk out of the picture and say, Mr. Smith, we'll create a portfolio for you, put it in your trust, and that's offshore. And forget about the rand returns. You look at the dollar returns. So it's a far more specialized analysis of a person's financial needs, risk tolerance. I mean, for some of you might not even know, in our company, we apply a psychometric test for new clients. We actually test their personality to give us a better handle on how they will react to market downturns or what kind. A lot of people come in being very aggressive, but when they do this test, which was devised by an Australian professor, it comes out saying, Meneer, you're a very conservative investor. That's what you think you're aggressive, but you're not. And that's part of our function, to try and match a person's risk tolerance or tolerance to risk to the investments that we can create. And as we said, I mean, the investment world is open up somewhere. You can create anything for anybody, but you have to know who's the person. That's why I'm not afraid of AI. AI can come with the best cash flows and forecasts and this. AI doesn't have emotion. AI doesn't understand the family dynamics. And we use it as a tool to be better advisors. But am I scared about AI taking over the role? No chance. There was a certain young lady about 10, 15 years ago who wrote an article in one of the papers, and she said, that's the first time I came across her name. She said, if you're an investment advisor, you must look for another job because robot advice is going to take your job. Now, I made a note of that lady's name, and I did contact her later. And today, she's a great, great friend of mine. Her name is Magda Wyziska. She said, robo-advice is going to take your life away. And I said, no, Magda, it's not. It's not. And then what has happened? Who uses robo-advice in this room?
Yeah.
Nobody. It was the rage 5 years ago. Everybody, robo-advisor and this and that, this has appeared. Anyway. That's it.
No, it's a very good point. A little bit of a technical question, but you can just explain why this is important for the broader people. From Gary Johnson, Reg 28 is a major impediment to pension fund performances. Why are fund managers not lobbying the Reserve Bank to remove or increase this 45% threshold?
I've been raging against this limitation for many years. I've written many articles on MoneyWeb when I was still writing for them, and even for Alec. The Reg 28 up until about 2013, 2014 only allowed 20% offshore, and I personally felt that was too low. It was way too low. And in fact, the whole retirement industry has got it upside down. I think when you're putting money into a fund, you should rely on choices to grow your capital as much as you can. Isn't that what the classical theory tells you? When you're young, you should take more risk. So the industry, as a kop ons te bo, where Reg 28 prevented you, it's prescriptive. It tells you you can invest 20% offshore, you can have 45% in equities and 20%. And it is very, very prescriptive. Now, the industry might have its own reasons why they're not making a big song and dance of this. I wrote many articles saying 20% is not enough. In fact, I recall a debate on Radio RSG 10, 15 years ago with the head of 10X at that point. He was actually screaming at me, saying 20% is enough. South Africans don't need more than 20%. That was the mindset, and I suppose it still is. So now you have a situation, and I agree with Gary, it does inhibit your growth by 1% or 2%. And as a matter of interest, this will interest everybody in this audience. We had a presentation last week as a company by an AI specialist from 91. And she said they, using AI tools, very, very sophisticated AI tools, they did a 30-year comparison of Rec 28 funds with discretionary funds, taking into consideration all the tax breaks, et cetera, what was the best outcome. And they've done this study, and it showed that the discretionary returns are better than in the Rec 28. So it protects people while they should not be protected. And when you take your money as at retirement, move it into a living annuity, you've got full discretion, which I think is wrong. And it's something that you could perhaps stir a little bit, Alec. Let him explain. Why am I prevented? If I want to be 100% offshore, I take the risks. It's my pension money. But when I retire at 85 or something, I can go 100% offshore if I choose to do so, which is the wrong time.
Monica Maynard's question is one more broad. It's most middle-class people's wealth is or was situated in their houses and primary properties. They can't afford to sell. You mentioned Joburg's valueless properties, and move to better governed areas. What is your advice to these people?
It's very, very difficult to tell people, get out of a non-performing house, because there's always a hope that somewhere it will return and do better. A house is also, apart from being a financial product, it's also an emotional product. And I'll give you an example. My dear wife, who's in the audience, when we got married 22 years ago, I gave her a house in Dainfin as a wedding gift. There, my darling. And for the last 15 years, I've been telling my skati, verkoop, sell. Year after year after year, I say, skati, hey, ons moet Kaap toe gaan nou. Anyway, to her, it's safety. It gives a good income. She's not really taken up on this phenomenal returns we can get elsewhere. And I think there's a big element of that. People love their homes, they want to sell. They actually write it off as a financial instrument and they make the investment somewhere else. But if you are in a town where it really is falling apart, my advice to people is take whatever money you can get and run, because the value 5 years later is probably going to be zero. But it's a very difficult decision to tell people to sell their house based purely on financial grounds.
And I suppose the question is more about, that's your major asset. In your mind, it's where most of your savings reside. But actually, it's not what you think it is. So perhaps it is better to face reality.
I would say middle class values today are in their RAs, tax-free investments, and their discretionary portfolio, wherever it might be, because the listed portfolios have grown so much and their properties have just not grown. So most people, middle class, rich people, their biggest asset is in their stock market or stock market related investment, not the house anymore. Unless, of course, you have bought somewhere in Hermanus, but you still need a big chunk in discretionary money.
Final questions from Johan Odendaal, which is the kind of thing I hate addressing, and maybe you do too. Has Brenthurst put a succession plan in place when Magnus retires at 85? That's only about 20 years' time, I think.
I get asked that question a lot. And I'm extremely fortunate to say that the average age of the people in our business is about 40, 45. If you take me out of the equation, you put me into the equation, it's 46. But I have 3 children. One of them is here, Magnus Heystek. She's our CFP. She's been in our industry for a long time. She's the head of our George office. My son runs the Durbanville office, and my other daughter is in Val de Vie. They're all CFPs, all got BCom degrees, BA, estate planning, tax. So there's a succession plan. And my partner, who's not here, unfortunately, due to personal reasons, he's been with me for 25 years. We have a very, very powerful bunch of young guys who can take over. And I will leave them with very strict instructions how to invest the money when I go. Thank you so much, Eric. It's always a pleasure.
This BizNews production is brought to you by Brenthurst Wealth, a multi-award winning, truly independent boutique wealth manager. Invest better with Brenthurst.